Today is Sunday, May 31st. This is the Conquer the Mummy channel. My name is Grady Garrett. I'm the Chief Trading Strategist. So let's look at the current trading situation on the S&P 500 with you. The first, we're going to ask several questions and hopefully answer them together. So, question number one: are the immediate signals in sync with the market? Meaning, are we buying lows, selling highs, that kind of thing? We generally seem to be tracking with what the market's doing. So, if we look on this chart, we can see the last off the chart signal I had on March 31st, and I'm going to just draw a circle here to point to this. You can see on April 20th, we had a sell signal, not a short signal, a sell signal, and the market did go down immediately after that, but not sellers couldn't seem to step in to knock it down more. Then over just a few days, within 5 days, we got a turnaround signal, an actual buy signal, 427, and that signal went ahead and it's lasted since then. The market then entered a kind of trading channel where there were some attempts to take it down, most notably in this time range right here. And I'm drawing the circle around. On that day, the Fed came out, Fed Chairman Powell. Now, he was long-term positive, but short-term, he wasn't very positive. He did not have his party hat on. And the markets did sink under that, but then they came back up, managed to get about even. And then CNBC drug out a hot hand economist that's well received on that network. And he was careful not to tell people to sell, but what he did mention was that the valuations were very, very high to kind of, in fact, warn people about buying, but without warning them. And after he had talked, the markets did actually go back down. However, when that day was over, when that day was over, there was not a lot of selling the next day, just some initial selling, and then the markets reversed to the upside. The next day there was more reversal. The sellers just simply weren't able to take advantage of any of that bearish mentality and take it down any further. And as you see, I'll draw a focus circle here. The market just kind of went back and forth, but you can tell it was starting to violate that trend line. And of course, this last week, the markets went up. It actually violated that trend line. Now, our system is still positive from that 427 signal. And I'm going to draw your attention down here. It's actually more positive than it was before. Our former market projection was 3,100, which is essentially where we're at now. However, the current model projections, these are non-linear projections, are actually off the charts. They're like 3,775. So my model is much more bullish than a lot of the models that we're seeing. And I want to talk just a moment about the way our free market system works. And it's more like a network, meaning it's very robust. It has those characteristics of a network. It's robust. It tends to move around problems and efficiently allocate resources. And one of the examples I'm going to give you on that, let me draw to this focus dot to the flattening the curve little diagram here. Prior to the lockdown, we were told basically, or presented with, if the virus was let to go forward, that the curve, there's two bell-shaped curves here and a flat line. The flat line represents our medical resources. The two bell-shaped curves represents the demand on those resources. The first one would be if we did nothing and the COVID virus spread out and people would become sick than basically what the medical resources could handle. You know, there wouldn't be enough beds, wouldn't be enough ventilators, wouldn't be enough masks, so on and so on. But if we lock down, it would reduce that curve, the amplitude of that curve, and we'd have something that would keep that. I'm just going to draw a focus line by this one. We would we'd have that lower amplitude curve, and it would be below the medical resource line. Now, this was presented, and I'm sure we all saw it. If you saw this graph, you kind of had an idea of it because you saw it many times. The one thing about this graph, though, that is not completely accurate or maybe misleading is that horizontal line was generally promoted as just a fixed feature, and in demand economy thinking, it is a fixed feature. But in free markets type of economies, that line can actually move up or down as needed. Excuse me. So, and I'll give you a couple of examples of this, well-known examples. One is you had companies like the My Pillow guys, pillow making companies, switch over, start making resources like masks, medical masks, that kind of thing. And then also, I caught a news story where the Dyson guy was going to work on possibly see if they're able to convert to making instead of moving, they were moving air with small electric motors anyway. So instead of using that to pick up dirt, instead to create air to create ventilators and things like that. So in an economy that is free, uh, has is able to move resources around, what you can see is that line will actually move up, even though it hasn't been presented to you like that. So just be aware of that as you see some of these economic projections and things. So let's go down here. We'll draw a focus line again. Got another Kleenex. Now, and this is so what I was saying before about flattening the curve was just to illustrate the strength of free market economy. So then as we go down here and try to answer the question, how's this recovery going to work? And again, that the L-shaped recovery is basically a negative thing. When they say that, when an economist says that, what he's talking about is a downstroke and something that goes kind of flat and something that then starts down again, almost like a reverse stair step that's leading us down. And the more positive one is the bullish one is the V recovery, where you have the economy takes a big punch and then it resolves that punch and then begins moving higher right away. My nonlinear models are indicating that what we're going to have is that second case, the V-shaped recovery. Some of the problems with the L-shaped recovery methodology is as follows. Number one is these complex economic indicators where they plug these numbers in and they have these big calculations and it spits out a number on the other side. We don't really have a lot of data with something like a pandemic on how that would work, and so my belief is that you just can't compare pre lockdown numbers immediately, not compare them to post lockdown numbers. So you just can't compare a number generated in April or May to a number generated, let's say, in December and January, because something's happened in between then that's substantial. And my indicators are indicating us more in that kind of V-shaped recovery. So I'm getting a different answer than they are. Another thing that I'm concerned about is that there may be some political bias on some of these estimates, these dismal estimates, because the upcoming election, and it's hard for people these days to not, to put that aside. It seems like everyone's falling down on this, not riding the fence, but they're down on one side of the fence or the other. And I'm concerned that type of dynamic is also affecting people's judgment and that they're not just looking at numbers, but instead there's a type of political call in there, with the L-shaped being more of a bet against Trump, and the V-shaped being more of a bet with Trump. Now, one of the things I would like to bolster my case for the V-shaped one, instead of just using telling you this is what my models are doing, I would like to look at basically one of the best known leading indicators, and it's called the stock market. And I would like to show you. Now, normally I use a 2-month focus chart, but I've got a couple of weekly charts I want to show you, and I'd like for you to just take a moment and pause and tell me whether you think this looks like an L-shaped recovery based on these leading indicator market charts, or more like a V-shaped recovery. So let's look at the first one together. Okay, so again, in this case, we see that big punch down, and we see the market uh, try to go down. Let's see, draw a little focus point in here, right here, but it can't really do it. It starts going up, There's a little channel, which we saw recently on the other chart, and then it's breaking out again. And so this is the S&P 500, which is a very broad ranging chart, and we can see this is broken out. And this looks a lot like a V shape to me. So if we draw a trend line this way, and we draw one this way, so I mean that's clearly a V. And this is a leading indicator. The stock market is a leading indicator of the economy. All right, let's look at another chart, another weekly chart. And this one is even more positive. And again, we see a downstroke, and we see the upstroke, and this is not far from what we had before. And this is the Nasdaq 100, which is the 100 largest of the non-financial Nasdaq stocks. So, and then you can also, and I'm going to switch back to our other chart now that you've seen that. And so you can see these do not represent an L-shaped recovery. They represent V-shaped all the way. If someone's telling you V-shaped, I think you have to question them on that, on their explanation. How do you explain that? When this is what's happening with the global stock market, which is a leading indicator. All right, so that's the point I make. So again, I fault the economists. I think because there's limited, especially in modern times. Now they may say 1918, the Spanish flu is a modern time, but there's a lot of differences between now and then. But even if you say it was a modern pandemic example, it's really the only one that was like that. And there's a lot of differences between these two as far as the death rate and everything. So one fault I would have with them is comparing pre-lockdown numbers to post-lockdown numbers, and not taking into account another one would be not taking into account the robust nature of a network like free markets. And the third one is I would challenge people to just be careful not to put their political feelings in this, because that can also affect some of your decisions. All right, I want to thank you for watching our channel here. And I want to make one more. I want to close with another quote of mine. I seem to like these quotes sometimes. So this is from Chester Nimitz, the admiral, just before not Pearl Harbor, just before Midway, the Battle of Midway, the turning point in the Pacific War. And part of his quote goes like this: everyone now agrees on where his wedding is going to be held. We just need to know how many guests are coming and when they plan to arrive. Thank you for watching ConquerTheMummy.com channel. Have a great day. Bye.